Hello there, my people. This is your boy, Mr. FX, and today I want us to share entry type 3. Uh, this is a kind of entry whereby the market just needs liquidity. At the end of the day, we know that market needs liquidity to buy or sell, right? So you actually need to look where the liquidity is. That's the first thing we look at. And when the liquidity is taken out, is then you can take your move. So according to this structure, this market here, first of all, I'll explain a little bit here. Let's say that the market's bullish, all right? The market's bullish, okay? Market's bullish like this, and the market break the structure. Market break the structure. This becomes your boss, right? And we said that you cannot buy or sell without liquidity. And liquidity, the first liquidity is the inducement, right? Inducement is the first liquidity that you have to look for, the low that caused this high, and at least you have to wait for it to be taken out, right? When this one is the inducement, you actually want to see the market, going down, taking out liquidity, and you can prepare to do it, to buy. That's what you look for most of the time. So you should never buy or sell without waiting for inducement to be taken out. So you have to be patient. Market will pull back, introduce again the sellers, all right? When sellers come in, market might tap on something on your left, maybe the order block or the order flow or something as a POI. And from that point, the market can start going up, right? And maybe you just had your order flow here or your order block there. So when your inducement is taken out, you need to confirm that high. And when the market breaks above like this, you get the break of structure right here. This becomes the boss, and you confirm that boss. When you get that break of structure, you need to confirm this low, right? And market, if it just come again, market can decide to come take out this low, or maybe introduce another low like that. So once market introduce something like this is just an inducement, all right? Inducement for sellers and for buyers. For you to be on the safer side, understand that this low that caused the high is the last move that the buyers entered this move, right? And they happen to place the stop loss where? Just around this level, the last buyers were here. Both the move and place the stop loss here. Logically, this area is full of liquidity. Be patient, wait until this level is taken out because this one is called an inducement, all right? When this one is it is an inducement, wait for it to be taken out. And market will always take out the inducement like this. Tap to anything, maybe you can see this is the last buy, this is the last sell before the buy. So this definitely is the order flow. Market taps to it, and market goes up, right? When it goes up, we are talking about entry type 3. Remember, this one is the order flow, like we have here. The order flow actually is just last buy before the sell or the last sell before the buy. So you see when this inducement is taken out and we happen to have a structure whereby this market supposed to break this high, all right? Supposed to break this high, but it fails. You see, it does not close above because we know that for us to have a break of structure, we need to see the market closing the body above. But if you see the market just sweeping with the high, all right, with the candle here and close below. So let me just show you in terms of candles. In terms of candles, I'm talking something like this. Something like this. Let me show you a good example right here so that you get to understand, right? We have something like this, and I'm gonna just do this here, do this here. You see, so what I'm trying to say is the market, instead of closing the body, right, the market goes up and closing with the what? With the wick. I don't know if I'm gonna make it clear, right? Something like this. So you end up having the body, like you see, not closing the body, but market going above the zone and just going below. What does it mean? It means that this market has cleared the external liquidity that was here because these are the last people who happen to sell this move, right? So most of their stop loss were lying on this area, right? So when this one is taken out, this means that this market want to go down, all right? So, and on this area, you can look for an entry right here, okay? Entry right here, and you look for entry. Once you get that entry, you can do what? Execute the market. So what do you look for when you come to a level like this on the lower time frame? What you do on the lower time frame, you need to have something like this. I'm showing you right here. This one, whatever I'm going to show you, it's something that is happening here, right? So What happens here? You need to go the lower time frame. Remember that when you look at the high time frame, you see this market has this liquidity, then you have to refine to use this shadow as your point of interest, all right? This shadow should be your point of interest because that is the level you're going to look for entry, right? So what you need, first of all, guys, let me tell you that the market does not care about your order blocks or those fair value gaps you're following. Market so much concerned about liquidity, all right? And I'm not saying that to trade on order blocks and fair value gaps is bad. I'm not saying that because I believe that every strategy works as much as you put in more work and back test and you can prove that it works, then you can use it, all right? But for my own research and the way I've seen how the market moves around, most of the time it's more so much into liquidity than, those other factors that we're always waiting for as your confirmation. So once you realize that on the high time frame, all right, market liquidity has been taken out, you realize that market will always move with the respect, okay? Come down, take out the inducement, give you a pullback, and again, go up, right? So you find that on the lower time frame, market is respecting the structure. Remember what we said about the pullbacks and everything, okay? This one becomes your first BO, boss, all right? When this one is your boss, you have your inducement, actually a pullback here. When you get that pullback, wait for it to be taken out, and this is your high, all right? This is your low, okay? And this one is just a new break of structure. Once you have that break of structure right there, you actually need what? You need again inducement, all right? A pullback here. This is a low cost in this high. Wait for it to be taken out for you to buy. But let's say that now this is happening at your point of interest. This means that you have this line, right? A liquidity sweep line there. Just use this one. Liquidity sweep line. Let me change the color so that it looks a little bit different, right? Liquidity sweep, you see this is a liquidity sweep here. Once market ups there, when you go in the lower time frame, this low that caused this high, okay? It's called a change of character, right? Remember, market has taken out liquidity, so you don't need inducement. You just need to get at least an order block with the imbalance, and then you take your entry. So market will have to come down, all right? Break this level just to show that it has broken the change of character. And since the liquidity has been swept on the upper side, what you need to see is to get something, an order block or order flow, and you sell from. And if market decide to give you an inducement, well and good. But if it does not give you, it's also okay, all right? It's also okay. So once let's say that you get the inducement, good. If you don't get it, well and good, but at least market can decide either to sweep liquidity here or maybe tap on something here as your point of interest again, and you can sell from there, right? And open a sell position from there. Let me get the right tool. You can open a sell position from here, okay? Stop loss just above it, and you can target the low where you want to target. So let's come back to this market right here and try to see this practically. This is a 4-hour time frame. The pair is GPP card. And on this particular pair, let's check it. I had to take a glass of water. So look at the structure of the market itself. As I've been telling you how you're supposed to do, make sure that you watch one video at a time, right? You watch one video at a time. Understand first primary structure mapping, secondary structure mapping, then you're good to go. So when you look at the structure of this market, just start from somewhere here because I want to save on time. I see this market was bullish and bearish before. So if I have to just start from here, let's say from here, okay? This can be a pullback. This is the first pullback here. Inducement, all right? The low cost, the high. Just saving on time. Inducement, this is the high, all right? Then the market break this high, we'll get what? We'll get the break of structure right there. It's a break of structure. Once you get this break of structure, this is our boss, as you can see. Okay. Market break the structure like that. Once you get that break of structure, where's our major low? The major low is here. Okay. This means if this market break this low, we get what? We'll get a change of character. So squeeze the market together so that you get to see what is happening. This low is never taken out. So after the break of structure, we say that when you get the boss, you look for actually a valid pullback, all right? Not just anything, but a valid pullback. And we already covered the topic of valid pullbacks. So is the valid pullback right here, this one, the valid pullback low that caused this high. Here you see these ones are inside the candles, so you don't consider them. And this one, is our pullback here. So when you get the valid pullback taken out, then you have to confirm your high. Once you confirm that high, what you're supposed to do is, what if the market, all right, close above here, that becomes a new break of structure. But if this market closes below a main low, where's our main low? The main low is here. Let me just squeeze the market like this, you see. Yeah, if market goes below this line, remember this is a major low. If it goes below it, you get the change of character right there. There's a valid change of character. And you have to check very well, because we say that for a break of structure and the change of character, market must close with the body. When you look at this one is just yeah, it is a confirmation, a close. And where's the inducement now? This means that you have to look for sell position according to the market. This is the inducement high that caused the low. Once you get this high that caused the low, you have to confirm this low here. And you prepare to look for a sell position. For example, we say that you only need 2 order blocks. One, right? One immediately after inducement, which is decisional, and it's this one, and you can see it happened to fail. If it fails, you go to your extreme, right? You go to extreme, because remember we said that a valid order block is what? Is an order block that has imbalance, and also we only need it to valid, at least it has imbalance, lead to break of structure, sweeps liquidity, and it must be at your point of interest, all right? So you cannot choose anywhere, just a level to be order block. Let's see where do you have the order block, right? Like this one is already mitigated. This one is extreme, right? The green one here, because you already mitigated everything here. Look at this area, it is mitigated. This one is the order flow here. That's buy before the sell, mitigated. So within this order flow, you can see you have this candle here, right? Have this candle here. But the problem is, let's see if it will work, because those candles that have been on the order flow that have been mitigated, they don't hold the market most of the time. You can see this one, it gave us the reaction, and we leave it. We have to we have to deal with the current market. So when you have this one is a decisional OB, right? When decisional OB fails, what do? When decisional fail, you go to the extreme, and you see market go to the extreme again, it will always need the liquidity. We say that if the market is bullish, right, like this, at least when it takes out this low, because most people, they place the stop loss here, when it takes out this low here, and you can prepare to buy most of the time. And if the market is bearish, like this, all right, once it takes out this high, people think this one is a change of character, and the market can just tap to your order block right here, and you can sell, all right? So what you're supposed to do here, what I'm trying to say, if this market has failed to this order block, we know that it want to go to extreme. So you look for inducement. The most reason the low that caused the high is this one, right? This one is a low, okay? This is a low, caused this high, because this market is like this, right? Sorry, let me get the right tool. Let me get the right tool and show you. Market when it fails in this order block, you can see it gave you a reaction. Is it here? Give you a reaction and fail, and the market started going up, all right? Because this was the last low cost in this high. Wait for it to be taken out before you buy, because we say that the market needs liquidity, markets needs inducement. This is a low cost in this high, becomes your internal, what we call internal inducement. And with the high, this is a high. And the market, when it comes to your point of interest, all right, this is an order block here, and you can look for a buy position there. But remember, guys, this market, it's down, is a downtrend. Whatever you're trading here, this is the internal, trying to go to the extreme or B here, all right? Going to the extreme or B. So you can buy from here, target this level, around this area. But now, well, let's see what is happening. You can see, if market breaks this high, this is a major high, remember? This is a major high. If this market decide to break this high, we'll call it what? We'll call it a change of character, right? We'll call it a change of character. But you can see this market from this high. Let me just use a line, a good line. You can see from this level, market went up. So you could counter this trade by buying on this particular level here, right? Could buy here, as I've told you, market will always need inducement. So you could buy here, right? Stop loss just below it. This is just an example, guys, okay? And here, and you can see this was the first decisional order block within the order flow that has been mitigated. And remember, when the order flow is already mitigated, even the order block will always be weak. So this one was just there to show you the level, right? But you need to target where? To target your extreme high, or if you have an order block in between, you can target. But right here, we knew that this order flow has already, it has been mitigated, no, which means that the order block also inside the order flow was a little bit weak. It's just like the more you refine the order block, the weaker it becomes. Also, the most mitigated order flows, they don't hold the market, right? And you can see right here, so much things were happening here. This order flow already mitigated. So you had this one, this order flow here, right here, this one, that was still unmitigated. Actually, this one left unmitigated. Sorry, unmitigated. So after that, you can see everything is mitigated. Everything is mitigated here, except if this market does what? This market sweep this high. So I'll remove these things just to keep the chart clean. This and this and this and this and this, right? Sorry, I have to take it back, right? And this one. So if this market takes out this high, you can do what? You can do what? You can look for a sell, a buy position if it closes above, because we got the choke. If it closes above, we look for a sell position. But look at this market. Let's see what happened here, because you can see market happened to come to a point of interest right here. When you see at this level, guys, this market happened to just sweep this high, which means this market collected all the stop loss from this other external where this external high here. What I'm trying to say is all these highs and lows in the market structure, they always contain like what we call the liquidity with the stop loss, because people sell there, right, and buy there in the same. So when this high is swept like this, it means only the money that was here was being collected, and you can now look for a sell position according to the main structure, the trend of the market. This one was inside move, inside the buys. That's why I say that you buy here, but you have to be careful because you're going against the trend, right? Because remember our trend here, the sign is what? We got the choke. So you're supposed to look for sell position. So when you come back here, right here, is when you're going to see what is happening here. When you come here, guys, you can see this level is where the market happened to give us what we call liquidity sweep, right? When this high was swept, this green candle, let me just identify the green candle, this one, right? This one, the candle that happened to sweep liquidity. So this shadow of it, you can mark it and you go the lower time frame to look for entry. How do you do this? Remember, I said if you analyze the market on 4 hours, you should execute or take your interest on 15. So you're going to drop on 15 and to see what happens there. As I told you, on this structure here, I don't know if you can remember somewhere there. Let me just repeat right here. I said that on the lower time frame, if the market has swept liquidity on the high time frame, what you need to see is just for it to go up, take out the first low, create what we call inducement. If possible, take out the inducement and you can sell, or else you don't need inducement, just up to anything, point of interest, and you can do what? You can sell. Because remember, if the market could have closed with the body, then you could have been looking for liquidity, because we know that when the body is closed, we need liquidity. But if this market has not done what? Has not closed with the body, we actually need what? We need just a candle with imbalance, or else we get what we call liquidity, right? Inducement, well and good. So this one, low that caused the high, we always call it what? We'll call it change of character. And the high that caused this low, we'll call it what? Inducement, okay? But if market has swept liquidity like right here, we already know that liquidity on the high time frame has been taken out, and in the low time frame, we don't need even inducement. We just want to get maybe an order flow, another block with the imbalance, and that's it. So I'm going to drop on 15 here, and we check what is happening here. So let me drop on 15 minutes. When I drop on 15 minutes, let me see what is happening here. In 15, when you come here, it is a 15 minutes here. Let's check what is happening here, because we know that on the higher time frame, market has already collected money, and on the lower time frame, this is how the structure looks like. Remember, this is a shadow of the green candle. Now, so what is happening here? Let's see. The low that caused the high, where is it? Because that is the change of character. You see this low causing this high, and the market has swept liquidity on the high time frame, which is another confirmation that this market no longer looking forward to go up. Sorry. But market's targeting to go down, all right? So when this low is broken, we'll call it a change of character. When you get this change of character, remember I've said that on the high time frame, if liquidity is taken out, on the lower time frame, you don't need inducement. So look at this level, market never give us the inducement, but you can see here, we have this candle here. Let me show you what we call the mitigation and also the liquidity sweep here. When you look from this level, this is the highest point here. This is a sweep, a liquidity sweep right there, okay? And when you look at this candle, the green candle here, you can see this one. This candle already, this has been mitigated. Look at this candle again here, also mitigated. Everything is mitigated. Look here, there was this sweep of liquidity right here. This market happened to sweep this liquidity, and again, just above it, there was this refined order block here, and also it was mitigated. Are you seeing that? I don't know if you can see that. Let me zoom more. You see this order block. And also this order block is very nice. It's an order valid because you can see also it happened to sweep the high, and also it had the imbalance and everything, market tapping there. And in fact, market went even to tap today, what we call the most refined week of this candle here. Here, you see, there's a week that this market went to tap on it there, and market went down. So when the market went down, you can see again, market kept pushing down. So for you, once you're waiting to buy, remember, you to sell, this is a change of character, then you need another block, the imbalance. Remember what we said, how to look for imbalance. You mark the high of the first candle at the point of interest. Now this market, since it's bearish, you mark the low of the first candle at a point of interest. You can see everything is mitigated. Now this candle, the green candle, is our candle of, it's the candle at our point of interest. So to check if it has imbalance, mark the low of the first candle. These are the low of the first candle at our point of interest, and you mark the high of the third candle. That's what I told you. This is the first one, this is the second, the third one is here. You can see we still got some spaces here. Don't know if you can see it. You can zoom, you can see this is what we call the imbalance right here. Okay. This is what we get imbalance. So when you get that imbalance, this makes which order block? The green candle to be a valid what? To be a valid order block. So if this market comes here, look at this. These are inducement, not inducement. These are point of interest. Order block there. If this market comes back to that order block, you can look for a sell position. Where do you put your stop loss? You can decide. Right here. Stop loss just above the order block. And you target where you need to target. We'll target according to the structure of the market, all right? Let's see. Let's go back to the 4H first. And where do you supposed to target? Because you're supposed to target the low, or according to this structure of the market, you can see the major levels. These are high, low, right? These are major structures, internal highs and lows of this market, like this. High, low, high, low, high, low, right? These are the internal structures of this market. So this means this is a major low, major high. This is another what? This is a major low, okay? So what you're supposed to do, let me just clean this chart a little bit very fast. Show you the most recent structure you could target here. The structure you can target to that TP is here, right? Remember this structure, the way it looks like. What the hell is happening? Okay. Look at this. This is a high, all right? This is the structure of the market. Like if you can see, let me just make it like something like this, okay? And this market's up, down, up like that. So what are you supposed to do? To target this level. I don't know what I'm doing. Get this. Target this low. You see this low, right? This can be your first target. This level can be your first target here. Then the other one can be this one, right? And target here. And lastly, because the market's bearish, you target the main low. What's the main low? The main low is here. The main low is here, right? This is where you target. So the first entry got here, you're supposed to target here as our TP1. So let's go back to the 15th, because you have to target according to the structure of the market also. Let's go back to the 15 and see what is happening. Right here, where is it? Oh man, come on, where is it? Yeah, right here. I think it's here. Now, when you get this one, target on the first line, right? Where is it? How far is it? Yeah, it's here. This is where you place your first TP, right? First TP need target there. Let's lock it. And go back and see you can get entry, because remember I said that one setup, guys, it can give you more entries. Yeah, one setup can give you more entries. You don't have to open many positions on one setup. One setup can give you more entries. So this one, you just push it aside like here, right? This is the entry number one. Let's see if this market give us entry number two. You can see this candle here tapped in our point of interest, and also it has swept some liquidity, right? Except the previous candle. Yeah. When you sweep the previous candle and it closes with the body, you can take another entry, right? You can see right here. It's just a wick, right? Wick, close. We want the market to close with the body like right here. When it closes with the body, you can see which candle is a point of interest. You can see this candle close the body, but this red happened to sweep this candle, right? When it sweep this candle, which means that you have what we call single candle order block, this candle here, right? And if market comes to mitigate this candle, you can open a position there again. So this can be the second sell position here, right? Here. Okay. Once you have this one again, you need to target the same very place. See? Need to target the same very place. Right here. So this can be TP2 right here, maybe. You want to target there. Then let's see if this market, after doing so, market change of characters. Now we need inducement since the market is close to the body right here. Change of character. There we go. Then you need here. Now we'll be looking for inducement. What you're supposed to do next, once market break this change of character, you see this entry and this one, market breaks this low. The point is this one, this market breaks this low. Place all your entries at break even, right? Once they are at break even, go back to the 4 hour frame and see what is happening, right? Because from there you can see here, this market, you can see those are the entries. And again, market did what? Market happened to take out the inducement. It was the most recent high causing the low. This is the high causing this low, acting as the what here, 4 hours inducement. 4 hours inducement. And once you have the 4 hours inducement, again with the low. This one is a low, right? So this means on this candle here, this is what we call entry type 2, where people, buyers and sellers are trapped. And when you look at this high, this was the candle that we had as a main candle with the imbalance. But you can see this market never tapped on that. What does it mean? Market does not need your order block for it to sell or buy, because market is more concerned about liquidity. So right here, you can come here and look for inducement again. Actually, change of character and inducement. What happens here, what I'm saying is this. Actually, we go into lower time frame. You just want to see the market, right? Taking out this low, right? Taking out this low, acting as a change of character, goes up, and we need inducement because this candle has closed with the body. We actually need it. We must have inducement. You see right here, we do not look for inducement because market did not close with the body. It happened to sweep. But right here, after inducement, market closed with the body. So what do we need? We need inducement, actually market to go above, take out this high, and if we get any supply zone or something here, we can open a sell position. So this structure should look like this. This one is just low cost, the high will act as a change of character. Okay. Then we need, once market introduce sellers and again introduce buyers and again sellers, drop them all, and you want to see the market. Okay, let me go slow a little bit. You understand what I'm saying is this. Market, because remember, we know that this, after inducement, this is the first candle, okay? Once it closes, we go in the lower time frame. We want to see the low that caused the high being taken out like this, and this becomes a choke. We want to see the market try to go up, right? And fail. What does it mean? It introduces buyers and sellers on the same time. So this area, it will become full of liquidity, all right? Then so far as we want to stay away until this market goes up like this and take out this high that caused this low. Like this will be our inducement here. When this one is our inducement and we prepare to sell, all right? If this market just sweep this inducement without closing above, we'll use entry type 3 to enter. But if not, we have to wait for the market maybe to tap to another block here or something, and we can look for sell position from there like that. Okay, so let's drop on this lower time frame right here. Yeah, and see what is happening here. We're going back to the 15 minutes again, guys. So let's go back on 15. Right here. Yes. Yeah. So let's see what happened here. Let's see what is happening here. If we get it, well, if we don't, then there's no entry here. Okay. Now, this was the 4 hours inducement here. So what's the low that caused the high? Actually, right here, you can see this is the main candle. This is a main huge candle here. So to follow all the rules, we have to wait for actually the low, because remember the valid pullback is here. This is a valid pullback. So we have to wait for this low that caused the high to be taken out, and this is our change of character. You can see that's a change of character. When that one is a change of character, we need inducement because market closed the body. So we need actually something like this. Want to see market, right? Pull up like this, take out this high, and maybe tap to on our order block or something there, and we can do what? We can sell. We can sell, right? So let's check where the high that caused the low, the most recent high that caused the low, according to this structure. For you to identify this, you must know what we call a valid pullback, the high that caused the low. Look at this. This one is a valid pullback high, was in this low. Wait for it to be taken out. That's our inducement. When that is our inducement, what's the low? This is our low, right? And let's see what happens here. We need the market to come to order block or sweep liquidity. When look at this level, starting from this high, you can see everything is mitigated except here. You can see there was this order block here. This one, let me show you. This order block here, right? That was never tapped. Oh, it was tapped, already used, nothing here. Okay, what else? This was mitigated already. Then this one, there's a remaining order block with the imbalance again also used. Now, when you look at this level, we don't have any order block because look at this. This is a major candle is here. This green. This green is a major candle. So everything is mitigated here. So actually, we want to see the market sweep liquidity, as I've told you. You see right here, this is the first sweep. And you see that market sweep and closes the body is when you can take our position. Again, this one is another sweep here. Then the last candle that happened to sweep was this one, right? We want the market to close the body for us to use single candle order block, right? So you can see here, market, this is just a week. Again, it's just a week. Again, this is just a week. And the last one, this is just a good one. It closes the body. Now, single candle order block, I told you guys, something like this is a candle like this. And just a minute, candle like this, okay? Let's say this is the candle. Candle here. No, that's not want to be straight. Yeah, right, let's just call it like that, right? This color is not good. Okay. Then the next candle, you want to see the next candle close to the body. So where it closes the body, maybe this is a week, this, and want to see the market close to the body right here. Okay, close to the body in the different color. Right, when you close the body, this one becomes our. Remember first, there are sweep liquidity somewhere on the high time frame like that, sweep liquidity. So when this candle, this one, all right, closes the body like that, and let me just change the color here. Percentage maybe 20. Okay. Okay. This one, we see when this candle closed down with the body. Now this candle that was remaining, which is a valid OB, we call it a single candle order block. A single candle. Where is it? Where is it here? Yeah, single candle order block. So does it mean we just place our sell limit here and buy full stop above it, not full stop, but actually stop loss above it. And we expect this market, when it opens this candle here, because you see, when the market's bearish, definitely these are the red candles. You know all the characteristics of the candles. we know that this candle, the selling candles, they are open above and they close below. So when they open, the next candle will open here, mitigate this one and go up, go down, I mean. So let's come back here to this market and show you the same thing. You can see this market has been closing the weeks. Then this one, all weeks. Then right here, you can see it happened to close with the body. Right here. You see. So which is a single candle order block? This green from this lot, all of it here. And you have to do it to place your sell limit there, right here. Okay. And stop loss just above it, like that. And again, you need to target where? You target your first region or second, wherever you want. Okay. But it's good when you have the levels where to target. So, or you can decide to collect all the money from those levels. This here, right? Here. And what happens here, you can see, let's go back. You see, this is the first entry. Why? Because if you look at it, this very well, you can see, again, this candle after closing, just look it. After closing the body, right here, just want to make everything clear. Our entry is supposed to be here. Look it. I don't know if you can see, if this candle closed with the body here, and red went down with the body, then this red, it came back to mitigate this one. Let me use something to show you. Here it closed to the body and we place a sell limit here. Market went down. When this candle closed, you can see this one, it came back to activate your position. Then market dropped and you can still add one more position, right? Let's see. You can see this candle that went above again also. It closed to the body here. Close to the body here. What does it mean? You have one more candle acting as your single candle order block. Where is it? This low up to somewhere here. Yeah. Then you place again where? Your entry, another entry here. Sell, limit, stop loss just above that order block, and you still target where? The low. So all these entries, guys, they are very logical, and it's only that it's late night right now. I'm recording this video. It's around 1:51. So, and if you watch this video and you don't understand, guys, DM me and I'll have to explain again. I'll have to repeat, and maybe I'll take some time. You know, I'm being fast right now because I'm feeling sleepy. So I'll have to repeat and explain well, all right? But this one is the next entry you take here. Now we have already 3 entries then. What's the next entry? If the market closes with the body again, let's see here. Yeah, you see this one closing the body again right here. Then there's the next candle. This means this candle, the green candle, the low of it and the high of it here. All right. In fact, this one, I don't know you guys will get to see this. You need to lock this one first. Then this the candle. This candle I'll have to give it a different color with it. Let us give it a different color. Where is it? Where are you? Not that one. Yeah. Let's change the color. This? No. Which color? Purple. I'm not even seeing the same thing. Let me first remove this one. First, we get to see what is happening. Yeah, this one is a order block. I wanted to change the color. See, that's the order block here. You see, there's the order block. Then we say that if the market closes the candle here, we take this candle again. But the problem is here. Look at this one. Let's just change something here. Here, because I want to make sure that you're seeing what I'm doing, okay? You see this candle? This was the sweep here. And again, this was another sweep here. So we actually start following this candle here, right? This one, we want to sit close to the body, right here. Close to the body. So where do we get a single candle? We take this one, right? These are single candle like that. But you can see market closed above. So which candle do we follow? We have to make sure that we have this refined shadow here. You have to be careful with it. If it's not mitigated, but you can see already it's mitigated. If it's mitigated, what do you do? what you're supposed to do is to place your sell limit here, right? Where did it close here? But stop loss just above this area, because this is a candle that stripped liquidity there. And again, you need to target your I don't know, what do you call it, your level. Okay, it's kind of sound complicated, but if you do practice and you get to understand how to use these levels to take your entries, then you'll be in a better place. So let's check if this market, there's a level when it breaks. You see, once this low is broken, this one, you stop where? You stop stacking positions. You see, right here. Once this low is broken here, you place all the entries at stop at your break even, and you can see right here, once your break even, the market broke here, you see it came back and it collected all the money here, but at least you close at break even. So what do you do? Once market has collected all the money here, because it's very reasonable, because here you can see there's a flag pattern right here, right? Flag pattern is here. Flag pattern is here. So what do you do? All this money is collected. All the money is collected here. All the money is collected here. So what do you do? Well, the money is collected. See here, you can still watch the way this market has behaved. You can see this one was just a sweep right here, right? This was what we call liquidity collection. When you get something like this, and again, you see money has been collected, what do you do next? First, remove this one. Because for me, I could be maybe waiting for this refine shadow here to look for a sell position. But you see, market does not even care positions, because when look at this level, you see this candle collected all the money and it closed with the body again. You see, closed with the body again. So this one is another single, what we call single candle order block. This candle, all of it, mark all of it like that, and you place your sell limit there, right here. Stop loss just above it, and again you target your low. What's that level? Yeah, at least here, right? You target here. Now, once this market break this structure, and here you can see there's two entries, no, one. Yeah, only that one. Then you can see this was a yellow, okay? Once this market has broken this low, like this, place your trades at break even, and you go back to the 4 hours and watch what is happening to the 4 hours. So when you check on the 4 hours right here, you can see this was the last position we happened to add on this trade. And when you're here, you can see this market almost reached this level and is going up. So what do you need? We know that market needs liquidity, and for it to keep moving, it needs liquidity. Liquidity is the fuel of the market. Now, this is the first liquidity high, cause the low, wait for it to be taken out, because that's the first inducement. Once that inducement is taken out, you can see right here we have equal highs. And you see that when you see equal highs, you just understand that there's a liquidity there. You see, this one is liquidity resting on this place. Once liquidity is resting on this place, and again, you can see there's a trend line liquidity right here, right? Trend line liquidity is here. So what do? You can see above this level, you can see you have a very nice order block. Let me just show you. Very nice order block. Very, very nice order block here. In fact, this order block has swept the high, and this is the candle that I'm talking about, this candle. So if market comes here, you can look for a sell again, right? So let me first remove these ones. Okay. So actually this market coming to, it's gonna come, likely to come on this order block right here, right? Because there's this liquidity here and also this trend line liquidity here. So if market taps here, all right, here, then you can look for a sell coming on Monday, right? Coming on Monday, you can look for a sell there. So you can actually see we're able to pile up around, round 3 position here, just under one setup. And this is what you should be either holding, all right? These two, or maybe have close, it depends with the type of trader you are. But coming next week, this high taken out already, market will tap on this level and you look for a sell. So Guys, that was what I wanted to share today. I know I've been so fast. Maybe I've not explained well the way it's supposed to. But if you really need me to repeat again on this video, take my time and make it clear in terms of entries, then I will just drop you your comment there, like and follow. It's your boy Mr. FX, and let's catch up on the next video.